Welcome to The Explainer. Think about elite sports teams for a second. How do they just absolutely dominate their competition year after year? Well, they don't just pop champagne for the wins and completely forget the losses, right? They sit down in the film room and they study the game tape. They obsess over exactly what worked and exactly where the play broke down. Today, we're talking about doing the exact same thing, but for B2B sales. We're unpacking this concept of win-loss analysis, which is essentially the ultimate game tape for your go-to-market teams.
But before we even get into the how of all this, I've got to hit you with a number that should literally make every single sales leader stop dead in their tracks. Ready? 85%.
Okay, let's dive into this. Research shows that a staggering 85% of the loss reasons sitting in your CRM right now, they are completely wrong. Let that sink in for a minute. The reasons buyers give and the reasons sellers log for why a deal was lost actually only align about 15% of the time. Think about the implications of that. If you're making million-dollar strategic decisions based on what a stressed-out sales rep quickly clicked in a CRM drop-down menu at 4:59 p.m. on a Friday, you are flying completely blind. So, in this explainer, we are tossing out those flawed CRM assumptions. Here is our roadmap. First, we'll look at the problem with guessing. Then, we'll define what win-loss analysis actually is. Walk through a 4-step playbook. Cover some common mistakes to avoid, explore the cross-functional benefits, and finally, show how to use all this to win your next deal.
All right, part 1, the problem with guessing and why internal assumptions just flat out fail.
It's actually wild how internal data can create these total illusions. Your CRM might say, hey, we lost because the price was too high, or maybe we were missing a specific feature. Those are super easy excuses to log, right? But ask the buyer? The truth is usually something completely different. Maybe your methodology was unclear, or the pitch was just poorly tailored to their actual needs. If you think you lost on price, but you really lost because of poor tailoring, adjusting your pricing strategy does absolutely nothing. You're fixing the wrong problem. And the data totally backs this up. More than 60% of the time, sales reps are just plain wrong about why they win or lose. And hey, it's not malicious at all. The rep is just too close to the deal. But if you only ask your internal teams, you get biased, superficial conclusions. It feeds the entire company bad data, which inevitably leads to bad product updates and completely misguided marketing campaigns.
Moving to section 2, what exactly is win-loss analysis? If internal guessing is the problem, objective feedback is our solution. Let's get a definition.
So win-loss analysis is the systematic process of capturing and analyzing direct, objective feedback from buyers to uncover the true reasons behind won and lost deals. It's not just a casual chat over coffee. It is a formal autopsy. It's replacing internal opinions with hard external facts directly from the people holding the checkbook. When we rely on internal guessing, where's the data coming from? A CRM dropdown. It's heavily biased, and the feedback is totally superficial, like, oh, it was the price. The result? We just repeat our mistakes. But with a formal win-loss analysis, your source is the actual buyer. The perspective becomes totally neutral, the feedback goes deep into things like trust or methodology weaknesses, and the outcome is compound improvement. That shift from internal bias to external truth, it is an absolute game changer. All right, section 3, the 4-step playbook. Let's look at the actionable execution framework for your go-to-market teams. Let's move to and see how this builds. Here is your 4-step continuous playbook. Step 1, analyze your existing CRM data just to get a baseline and see where deals are stalling out. Step 2, collect the direct buyer feedback. You actually have to talk to the buyer. Step 3, analyze and interpret the drivers. Was it a positive driver or a negative one? And finally, step 4, share and operationalize those findings across the entire company so everyone learns from it. Now zooming in on step 2 for a second, actually collecting that feedback. You've got a few different channels, and they all serve a specific purpose. Live interviews, those are your absolute gold standard, usually clocking in around 30 minutes. These are absolutely vital for your high-value strategic deals because a real conversation uncovers the nuance and emotion that pure data misses. Then you've got AI interviews, which are becoming a fantastic way to scale feedback across lower-value deals. And finally, surveys, which are super useful for tracking broad trends and validating the patterns you're seeing in the interviews. Section 4, avoiding common mistakes, because you definitely don't want to fumble the process once you start. There are 6 classic mistakes that can absolutely destroy the value of a win-loss program. Let's fire through them. First, not making it a formalized ritual. Second,
lacking top-down C-level support. Third, only asking your salespeople, which, as we just saw, gives you bad data. Fourth, not using a neutral third party. Fifth, treating it as a one-shot deal instead of doing it continuously. The market changes fast. And sixth, hoarding the insights and restricting access instead of sharing them broadly.
So the crucial point is this whole neutral third-party thing. I really want to emphasize this. Think about human psychology for a second. If I just rejected your proposal and you call me up to ask why, I'm probably going to let you down easy, right? I'll say, oh, it was the price, or timing just wasn't right. I am not going to tell you that your presentation was confusing or that your competitor's rep was just vastly more competent. Buyers rarely give the unvarnished truth directly to the company they just rejected. Hiring an external objective interviewer is an essential investment to get past all that politeness and uncover the candid truth.
Section 5, the cross-functional benefits. Let's look at the scoreboard and the actual ROI of doing this right.
And this is exactly why we do this. A massive 63% of companies using formal win-loss programs see a direct, measurable increase in their win rates. Almost 2/3. It's not just some nice-to-have feedback loop. It is a proven revenue generator.
Gartner actually did the research on this, and it's pretty mind-blowing. A rigorous program can boost your overall win rates by up to 50% and increase total revenue by up to 30%. Think about the math on that for a second. If you were managing millions of dollars in a sales pipeline, just bumping your win rate up by a few percentage points adds millions of dollars in fresh revenue. It is literally one of the highest ROI activities a go-to-market team can execute.
But here's the thing, the value doesn't just sit with the sales team. The intelligence spreads across the whole company. For sales, you get better coaching and shorter ramp times. For product, you validate the roadmap and find out what features actually move the needle. For marketing, it creates sharper messaging that perfectly reflects the exact language your buyers are using. And for leadership, it completely replaces those vague gut feelings with confident, data-driven decisions. In fact, companies that share these insights cross-functionally are way more likely to see those massive win rate jumps.
Finally, Section 6, winning the next deal and compounding your learnings. Because this isn't just about looking backward. I absolutely love this quote. Every bid outcome, win or loss, contains the precise intelligence that makes the next submission stronger. When you apply this discipline continuously, it compounds. You close an evidence gap here, you fix a tailoring issue there. Over a year, those isolated improvements stack up into a massive, multiplicative effect across your whole strategy. You completely stop guessing, and you systematically outmaneuver the competition. Which brings us to one final really important question. The next time a major deal slips through your fingers, don't just log price in the CRM and call it a day. Ask yourself, are you leaving the lesson in the loss? It is time to stop guessing, start treating every single outcome as a diagnostic tool, and use that game tape to secure your future victories. Thanks for hanging out with me for this explainer. I really hope it changes how you look at your pipeline.